Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, April the 4th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then when we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses. We do not know what the market's going to do. Therefore, we create scenarios based on who takes control, mainly our Hypo 1 and our Hypo 2, which is our two main scenarios. And then we look at Hypo 3 and Hypo 4, which is expansion days or trend days. And then we wait for the market to open, give us clues to who is taking control, and then execute the plan that best suits the market. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. We do everything here in the go-to, in the pre-market session. Then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results of any trades that you see in Quantum Leap. It is for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Man, I don't know how many. I can't believe I have that all memorized from saying it so many times. All right, so let's take a look at yesterday. Yesterday, we were looking for an inside rotational day. We were looking for either a rotational day between the two lower distributions or up here in the thin area of the profile. For the most part, we played out Hypo 1 for most of the day, and then once we got above that 260150, our Hypo 3 kicked in with the target up here at the 6-day microcomposite VPOC and the key line in the sand above. And we basically we were still looking at the possibility of getting a neutral day with the break of the 7350, and then the news came out of the White House that there was no plan to take action against Amazon. And what happens is we get this big push up, basically a 40-point move, and close near the highs of the day. This was actually indicating that we could get continuation in the Globex, and that's not exactly what happened. We did open up in the Globex, and we started to make the rise. We got up to the 1450, unable to break the range from the prior day, and then we just sort of drifted slowly down, coming down to test that key line in the sand again at the 260150. Finally, looks like we're going to hold there, and then Europe opened up, and Europe does not like all of the trade war news, and we had this huge sell-off, down to 77, chopped around, got the continuation, got down to 59.50. Now, we didn't break below the 52, which is our week low and our month low so far, and they rallied back up, and we created a pretty decent distribution day at the 77, and coming up to test the VWAP right now. But our range is 55 points in the Globex. That's larger than the range that we had in the RTH yesterday. And you can see we have had some serious OTF participation once Europe opened. So Europe has been very active on the sell. The delta is minus 11,000. We've got what's the volume so far? I always have a hard time reading the label here. Let me go to my other chart. I'll just pull it up there. It's easier. Our volume so far is 361,000, almost 362,000. So basically, 3 times the normal volume. So we have active OTF participation, and we'll be looking to see if they remain active. Another B-shaped profile, okay, long, long liquidation, and we'll be watching some key levels. Let's just take a step back and look at the news. We had ADP non-farm employment change came out, at 241 versus 208, so better than expected. We've got FOMC member Bullard speaking in 49 minutes. We've got the market composite PMI, services PMI, and then at 10 o'clock, we've got durable goods and factory orders, gap ship non-defense, factory orders, transportation, but the big one is going to be the ISM non-manufacturing PMI. This can be a market mover in a major way. Then at 10:30, we've got crude inventory. We've got FOMC member Mester speaking. And that's about it for the day. That's at 11 o'clock. So we've got a lot of news, scheduled news this morning, but it's the headline news and everything with China and Europe and the whole trade war heating up, and the fight with Amazon between Trump and Bezos. There's lots of headline news, so you just got to be careful. I think we're going to see a pretty volatile day today with some very large rotations. I mean, the average harmonic rotations in the last week or so have averaged above 10 points, and you just got to be careful, because it's these making these moves out of nowhere, and things can get ugly very quickly if you're not quick to take losses quickly and get stubborn. Taking a look at the macro to the micro, I always like to start my day, as you know, with a simple candlestick chart. And I start with a monthly. I use a 9 EMA and a 20 SMA. I don't trade off the moving averages. I use them for homework and to give me an idea where we are in each time frame in terms of the trend. Do we have good slope and separation? Is price paralleling the 9 nicely? And where are we challenging the trend by breaking below the 9, or possibly violating the trend and breaking above or below the 20 SMA? 14 months of one time framing up, violated in February, but did not hold below the 9. March was an inside month, but held again above the 9. And so far this month we've opened and we've broken below and having trouble getting back above and holding above the 9 EMA. We're losing slope and separation, so they are challenging the trend. The trend is weakening on the monthly, but it does not violate until we get in the low 2400s. On the weekly, a little bit different story. We've broken below the 9 and the 20, and we've got a downward slope with start of slope and separation, and an ability to get back above the 9. So possible start of a trend change on the weekly. On the daily, you can see that accelerates, and we're now having slope and separation, and we keep rejecting the 9 EMA, and continuing what could be a downward trend. Now, we did get a Mr. Sneaky yesterday, but there wasn't a lot of a technical gap against it. So I'm considering this a regular Mr. Sneaky and not a FUBAR Mr. Sneaky. Therefore, we have to wait for a new low to be put in and then respected before I'd be looking to execute along off of this particular pattern. And again, slope and separation to the downside, the trend is down. Going to the intraday, the 4-hour, you can see that we've basically just been stair-stepping down, and every time we try to get back and hold above the 9 and the 20, they fail and come back down, and we're getting slope and separation to the downside. Going to the 30-minute, you can see same picture. slope and separation. We are trying to get back above the 9 right now. The 20, we don't get above that until we get above that 25.8850. So let's take a look at the bigger picture structure. Now, I made some changes. I've come down here from the last breakout and what I consider to be the next big target below, which is down in the 2505 area. And I started a new longer time profile, okay, that goes from the breakout of 09/29, 2017, and so September, and running it through to see where value is, and the value area high is all the way up at 27.29 1/4. Value area low is down here at 25.4950. 25.4950 is going to be our key line in the sand below. If we break below that, I'm targeting the 35s. There's a naked VPOC down at 35 and 32 area, and then we've got a gap still down in the 23 area. The VPOC for this whole period is at 25.75 or 25.25. I thought it was 25.25. Yeah, it's 25.25. I'm sorry, 25.85 1/4. And that's sitting just below the 6-day, or so, I'm sorry, now 8-day microcomposite. I added these 2 days in because we rotated back up into value, okay, yesterday, and back up to what was the 6-day microcomposite VPOC. So I've added the Monday and the Tuesday into this smaller time frame profile, and the VPOC for that really hasn't changed. It's in the 1350 area. It was 13 before. But the value area low is sitting right on top, just above the microcomposite for the much longer time frame. So that's going to be our over-underline, or I'm sorry, our key line in the sand above. The 2-day microcomposite is the 77.75. We're trading right at it right now. So this is the most traded price in the last 2 days, and we've come back to it. We're in this distribution zone with that 69.75 below us. I was using that as the key line in the sand, but with the move down last night to the 59.50, I've lowered that key line in the sand below down to the longer time frame value area low down here at 49. So taking a look at the overnight inventory is 100% net short. I'm looking for some balancing and some covering, so I'm looking for a rotation up, but with this move down, I'm looking for a continuation lower. Now, we have already surpassed the daily downside ATR target. The overnight high is 26.1450, and our daily 20-period full session average true range is running at 47.33. So the downside daily ATR is 67.25. Of course, we've already gone down and broken that. So we put in a huge range overnight with large volume. So there's a possibility that we get stuck down here and get stuck in this wick down here from Monday and the wick from yesterday and just chop in this area today. But with the volume, if I see us break down and hold below the 67.25 and we do not hold the key line in the sand, this could get very ugly, and it can get down into the 35.32 area. The February low down at 29, with the next big with the naked close, the gap down here at 24.50, and the next big target low down here at 2,500. It's a possibility. It'll be a huge move. It would be a 100-point full session move if we get down to the 25.14. So the probabilities are low, but you gotta, with this market, you gotta consider those possibilities. Now, we're going to open up in range. My over underline is going to be the 2-day microcomposite. Above it, I'm looking for a move up into the 81 and a push to that microcomposite VPOC on the longer time frame up here in the 85. And of course, if we get above the 2586.75, which is the 6-day value area low, then I'm looking for the push up into the 91s. We're going to have a big gap, and our overnight high is up at 1450. So personally, based on the statistical probabilities of taking out the overnight high or overnight low, I'm shifting my bias to taking out the overnight low. But anything can happen in this crazy market. So watch your news, watch your headline news, and don't get stubborn. In terms of hypotheses, I'm looking at an open auction in range. I'm looking for balancing a move up into the 81 and somewhere from 81 to the 86.75 level. I'm looking, and possibly if we get some really big rotations up to the 91, but somewhere up in this area up here, I'm looking for responsive sellers, and then I'm looking for them to come down, challenge the low, break the low, push down, and move down. And I'm targeting the overnight low, possible push through to test the month low and the key line in the sand, and then basing and coming and chopping in this 55 to 75 area and getting stuck in that wick below. That is hypo 1. Hypo 2 is an open auction in range, a push down first to the 59.50, take it out, and then somewhere between 56 and 49, I'm looking for a base and a move up and a rotation up, and I'm targeting the 91 area on hypo 2. But I'm looking at closing somewhere in this 86 to 85 area. That is hypo 2. Hypo 3, because of the weakness, is going to be a failure day, flipping that hypo 3 and hypo 4 down. And I'm looking for an open test drive, failure to get above the 85 level, break hard down below the 73, come down into the overnight low, chop in this area, then get continuation wave down, and I'm targeting this 35 to 32 area, possibly a late day probe down to 23. I don't think we're going to get much more than that, but with these large days, there's a possibility that we come down to this next big target below, down in the 25.05, and start challenging the 2400s. That is hypo 3. Hypo 4 is a open auction, failure to take out the overnight low, somewhere between 73 and 67. I'm looking for a false break below the prior day. Buyers step in and stay on it and rotate us up into the 91 area, chop in this distribution, and then push up again to challenge the 2600 and come up and take out that overnight high. It's a low probability, but we've been seeing a lot of low probabilities. Just be caution. Any selling today, I think, is going to be met with buying, and we're going to get these rips to the high side, okay, on every push lower. So I think there's going to be spurts of buying, and you're going to see these 10-point to 15-point rotations to the upside, but continuing to just stair step us down that way. So just be careful on both sides. Try to take chunks and don't get stubborn. It's going to be, I think it's going to be very hard to hold for any long period of time today unless you catch a really good entry and you can sit through 5 to 10 point rotations going against the position. So that's ES on gold. Gold continues to show strength. We're up challenging this breaking above that 49.50 area. The target today is that 54. I'm expecting us to continue up. We might, struggle here and chop, and we might have to come back to the 45. But ultimately, the target today is going to be this 54 and possibly up into the 57. I don't think we're going to get much higher than that. But if we do break above the 57, the immediate target is the 60, 61 area, and the next big target above, which is at 1362.80. So just be careful. If we get below the 41s, then look for a trip back to this 37 area once again. All right, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.